welcome back to Stately Investing. In today's episode, we are talking my top 3 pharmaceuticals. We'll be talking about their business models, what's in their pipeline, and most importantly, what do their dividends look like. And then we'll have a special 4th guest of honor or notable mention. But first, if you want a channel that is going to help you speed up your journey to financial freedom through dividend growth investing, Stately Investing is the place for you. So hit that like button, hit that subscribe button, and turn on notifications, and let's get started. All right, so the first company we're going to cover today is Pfizer, ticker symbol PFE. And some of you guys might have seen my Pfizer video that I did recently doing a in-depth breakdown of their company and their pipeline. I'll put a link up top and also down below so you can check out that video. But today we're going to give you kind of the highlights of this company and why they're one of my favorites. So the main reason Pfizer is on this list for me is their size. So Pfizer is one of the biggest pharmaceutical companies out there. They are very good at what they do. They kind of have the pharma industry down to a science, no pun intended. So I think that one thing to quickly explain is just how the pharmaceutical industry works if you're not familiar with it. So typically what happens is you have a bunch of compounds, chemical compounds that you think might be good for treating some kind of disease, right? So these are therapeutic areas, and usually a pharmaceutical company will specialize in a few therapeutic areas. So take, for example, kind of like dermatology or skin disorders, or they'll focus on oncology, which is cancer-related compounds, right? So you'll typically focus on a few therapeutic areas, and then you take those compounds and you test them out, right? And so that's what you typically hear of as phases. So phase 1, 2, and 3, with 3 typically being human trials, right, before you get approval by the major agencies throughout the world. And so you have to go through those trials in order to actually get the compound out the door into the market. And so what Pfizer is good at is just having a lot of compounds in the pipeline. So the pipeline is the number of potential projects or compounds that you have that you think will work, and there is various phases, and you also like to see them spread out amongst phases. You don't want all of your eggs in one basket, so to speak, and so you don't want to see everything that's in like a phase 1 or phase 3. You want to have a sustainable pipeline and constantly being able to generate research and spending money on that research in order to develop new compounds and new drugs. So yeah, that's the basics of how the industry works. Most drugs or most compounds have a 20-year patent. Usually it takes about 10 years to get something out the door if it's approved. And so then you have another 7 to 10 years on that drug once it is out in the world before it will go generic. And once a drug hits generic status at the end of its patent, typically you aren't generating any revenue on it unless you find a new therapeutic area that it can treat something, and then you can get a new patent. So let's look at Pfizer today, and let's look at what is currently in their pipeline and also just their current products. All right, so this is a quick snapshot of Pfizer's pipeline. You can see this is as of October 27th, 2020, and they have about 92 drugs in the pipeline through various phases. Again, you can see this kind of equal spreading out throughout phases, with 6 basically getting registration in the approval process. And the reason we covered Pfizer in the previous video was their news on their latest COVID-19 drug being 95% effective, which is great news for them and really boosted their stock. But you can see just this is what their pipeline looks like currently. You can see some of the recent approvals here for various drugs you may or may not have heard of, and it kind of talks to you about what those drugs do. So this is a very helpful, they actually create a PDF of their pipelines. You can see the compound names, etc., and the different indications or the different treatment areas that these are for. So like I said, Pfizer is on this list for me because they have a very solid pipeline. They've been good about spending money for research and development. They kind of keep that consistent throughout their years and not depriving their scientists of money. And so that way they're able to keep this pipeline going and really be able to address a lot of big areas. And they typically focus on diseases that affect a lot of people, right? So you want to, typically as a pharmaceutical company, you want to sell as much of this product as possible. And so you have to focus on areas that are large problems or diseases that affect a lot of people. And so that's what Pfizer is very good at. And then let's also transition over to their dividend and understand what's going on with their dividend and why I keep it in my portfolio. All right, so we're on Pfizer's Seeking Alpha page here in the dividends section. So in order to get here, you can just type in PFE and then you go to their dividends and you can understand, you can see some of the highlights of what their dividend is doing. So their current yield is around 4%. Their price right now is 38.25. It's, up today as of November 30th. That's when I'm recording this. But you can see that their payout ratio is in that 50% range, which is pretty good, right? It's not too high, it's not too low. The yield is in that solid 4%. Again, I tend to think of Pfizer as a stability company, a stability pharmaceutical, which is actually very good because there aren't a lot of stable pharmaceutical companies. A lot of them are in growth mode. And so you want any that are paying out dividends has some hint of stability, right? But you also want to make sure that they are actually stable with their financials and that they're in a good position to continue to pay out that dividend and grow it. So you can see their 5-year growth rate is 6.72%, and they've had a good track history of 10 years growing their dividend. We'll quickly look at the dividend growth tab so you guys can see the chart. They were on a pretty steady rise here, consistent kind of exponential rise here until financial crisis of 2007, 2008, where they actually had to cut their dividend. And now it's kind of been rising and it's actually above levels it was before. So overall, I think, if they didn't have to cut that dividend in 2007, 2008, this would have been a, kind of resounding success story as far as growth is concerned. But overall, I think Pfizer represents stability in my portfolio for pharmaceuticals. So why don't we jump over to the next stock that we are going to analyze in this video. All right, and our next stock is Gilead Sciences, ticker symbol GILD. So Gilead is in this portfolio for a very specific reason for me, and it's not because of their COVID-19 drug, which is Remdesivir. I've done a video on Gilead and you can check that out. Again, I'll put a link up top and down below so you can look into that video and go more in depth on Gilead. But overall, this is here. Gilead's in this top 3 list for me because of their monopoly on a specific therapeutic area. So Gilead is one of those companies that, specializes in a few therapeutic areas, but they have one particular area that I think they have a monopoly on, or they have kind of the lion's share of drugs that for that area. And so that's why, I think they have a very good moat, right? We talk about companies having a moat or a defensible position, and so that other companies can't move in on their territory, basically. And for Gilead, that area is antivirals and specifically HIV medication. And so why don't we jump into their pipeline and explore a little further. All right, so we are on their pipeline page, and you can see here that they specialize in these focus areas of viral diseases, inflammatory disease, and oncology. In particular, like I said, I think this viral diseases area is where they are of particular note, and potentially the reason why they were able to develop a COVID-19 vaccine, or a COVID-19 treatment, I should say, that is so effective, and they were able to do it very quickly. So Remdesivir is for advanced COVID-19 cases and treating them. It's not necessarily a vaccine to prevent COVID-19, but it is able to help patients recover faster, especially when they're in a severe state. So a very important drug for the COVID-19 treatment as of November of 2020. But in particular, I think this moat around viral diseases and the ability to kind of control the market on HIV drugs is Gilead's specialty. They also have some very good oncology cancer drugs as well, but you can see kind of their pipeline, right? And they're constantly just kind of evaluating and getting new compounds into the market, or getting new compounds into phases and getting them through testing, and also good at getting them good results in human trials and then getting them approved with the FDA. So I think overall Gilead has a very good pipeline in this area. And let's move over to their dividend to understand how they've been growing for the past few years. All right, so we are back on Seeking Alpha. Again, you can type in GILD and go to the dividends tab here and you will see this information. So overall, you can see their yield is at 4.5%. So we're starting to get a little higher, right? I think Gilead's in that growth area and that their price has kind of been hammered, right? So typically these pharmaceuticals will have a yield anywhere from kind of 2 to 4%. And I think they're slightly above that just because their price has gone down recently. And we'll jump to my Robinhood account to show you kind of their price history in a second. But overall, their payout ratio is in the 40% range, which is good. Again, I like to see these pharmaceuticals in a lower payout ratio, so that way there's still room to grow, meaning they still have, if they have a blockbuster drug and they start making a lot of money, they're able to pay out those dividends and able to really grow that dividend, right? You can see that their dividend growth is about 5 years, and that's why that 5-year growth rate is not there. So why don't we jump to dividend growth to understand? You can see that their 3-year compound annual growth rate is 11%, which is very good. And you can see, hey, here's the dividend growth yearly, right? So you can kind of see that they've been ticking up. Again, it only has kind of 5 years of data here, but you can see that it has consistently been going up. If we look at the 5-year chart, it's going to look exactly the same. But yeah, it's been growing. I think there's room to grow. I think this kind of lock on the antivirals space is something that will allow them to continue to grow their dividend, and they have a solid pipeline, which is something I like to see for pharmaceuticals. So why don't we jump into Robinhood so you guys can see kind of the pricing history of Gilead. All right, so we're here in my Robinhood account, and you can see my market value, right, for Gilead is around $881. This is in addition to my positions that I have in my M1 portfolio, where I have, I think it's around $1,200 or so. So in total, I have about $2,000 worth of Gilead Sciences and my two main passive income portfolios. But we can look at the 3-month, and you can see that they're down around 8% overall. I think the price is at a point where I am interested in buying more, right? Anytime Gilead is around $60, I think it's worth investigating. I think, their yield at that 4.5% mark is a bit high, and so it might be time to start buying some stock. But generally, I think the reason it's down 8% is because rivals in the industry, like Pfizer, for example, have come out with COVID-19 drugs. So remdesivir was really the first big blockbuster COVID-19 drug that was announced. But what we found out is that it was for the treatment of existing COVID, usually to prevent kind of severe advancement to more problems with COVID, right, rather than an actual vaccine. And so other pharma industry or other pharma companies coming out with COVID-19 vaccines, I think, has hurt their price for the past few months. And so that's why it's down and looking like a nice juicy target to buy. If we look overall for the year, again, they're down around 10.7%. I think there were some failures of drugs, right? So remember, in order to make it through the pipeline, you have to go from phase 1, 2, and 3 and then get approval. And so I think there was a drug that everyone was kind of expecting to be very effective, and then in phase 3 it failed, basically, right? Like, it didn't show that there was significant improvement for whatever treatment area they were trying to improve, or whatever disease they were trying to tackle with that drug. And then the 5-year also is way down, right? So you can see back in here in 2016, they're in the $100 range. And to me, this just means that there's a lot of room for recovery with a strong pipeline and a defensible position in certain therapeutic areas. I think Gilead has the ability to turn it around. But if you want more information, again, check out my video. You can hit the link down below. And why don't we move on to my third and final stock pick for this video. My last pick is ABBV. So ABBV, ticker symbol ABBV, is a company that specializes in a couple of therapeutic areas as well. And the reason they are here is because of kind of blockbuster products that they have now, and then also yield. I think AbbVie has a great yield, or it did, at least for the past few weeks, and their price continues to go up, so that yield isn't looking as great. But AbbVie is just another solid company, not quite as big as Pfizer as far as the number of drugs in their pipeline, but overall, I think AbbVie is in a solid position. So why don't we jump into their current products and their pipeline to understand more? All right, so we are here on AbbVie's pipeline page, and you can see that there are a lot of drugs in their pipeline. We're going to quickly kind of go through it, but their main focus area is immunology, and that's probably why they have it listed first. So immunology includes things like arthritis and lupus and some of these kind of inflammatory diseases, and that's really where they are focused, and have quite an extensive pipeline. You can kind of see phase 1, 2, 3 and submitted, and where each is. And I'll slowly scroll through. Their big blockbuster drug is Humira. Humira has been approved and has been out in the United States and in EU for quite a long time. And I think it is one of those things that we have to watch with AbbVie, because once this rolls off patent, they will lose a large chunk of revenue. But I think they have a ton of other drugs in the pipeline, and even if one of those is as effective as Humira or treats, rheumatoid arthritis, which is kind of a big area, right? Again, we're talking about like number of potential patients, or potential users of those drugs. I think AbbVie is well positioned with its pipeline to continue to be kind of the star in immunology. So similar to Gilead with antivirals and HIV areas, I think AbbVie has kind of a lock on immunology. You can kind of see as I scroll through, there are other areas like psoriasis and Crohn's disease, dermatitis, right? They have just a very good, extensive pipeline. They also have some interesting prospects in neuroscience, right? So Alzheimer's is a huge focus area for a lot of pharmaceutical companies, because there hasn't been any real blockbuster drugs for Alzheimer's disease. And if somebody can unlock that, they will make a lot of money. And so obviously AbbVie is focusing on that area too. They do have some drugs in the pipeline, and if one of those ends up working out, I think it's a huge win for them. They also are starting to, you can see a lot of phase 1 for these oncology drugs. So they are kind of branching into the cancer space as well. And they are positioned to make a difference there as well. So overall, I think AbbVie is a solid pick. Why don't we jump into their dividends and understand why they're in my portfolio? All right, and AbbVie. So AbbVie is actually one of my top holdings in my passive income portfolio. So I don't have any in Robinhood, but in my M1 account, I believe I have over $2,500 of AbbVie. So, I believe in the company. I think they are, poised for growth and poised for dividend growth in particular, which is always what I'm looking for. So here we are again on Seeking Alpha. You can see that their yield is hovering around 5%. So anytime AbbVie is around a 5% yield, I think it's a great buy. Like I said, their pipeline and their focus areas of immunology are their key strengths. And so their price had come down quite a bit recently. And so now they're starting to tick back up where that yield is back below 5%. Overall, their payout ratio is right in that 50% range, right? So right in that kind of middle point. But this is what is exciting to me, is this 5-year growth rate of their dividend. So they're starting to focus more and more on paying out their shareholders through the dividend. So their 5-year growth rate is 20%, almost 21%, and they've had 7 years of growth. So why don't we look at the dividend growth tab here so we can understand a little more. You can see they kind of started in 2013, and they've just been consistently growing that dividend, which is what we like to see. This growth rate is phenomenal of 20%. Basically, that's giving yourself a raise and making your money work for you, which is the dividend strategy. So lastly, I want to cover an honorable mention, and one that's not on the list, but is actually probably one of my favorite stocks overall, which is Johnson & Johnson, ticker symbol J&J. So Johnson & Johnson is a company that I would love to own for the rest of my life, basically. They do have a large pharmaceutical revenue business, but they aren't entirely a pharmaceutical company, and so that's why I didn't include them on the list. But if you want to check them out, J&J is one of the best dividend companies out there, especially if you want a stable dividend. So it's not a high yield, but overall they just are very good at managing their money and making sure that dividend gets paid out. There's a lot of stability in it. and they're just amazing at continuing to grow their revenue. The company has been in existence for a very long time, so I encourage you guys to check that out. So with that, I will wrap up the video here. I think, the pharmaceutical industry is always exciting to me. I think you guys have to do a lot of research on pipelines and make sure that you understand what the businesses are focused on, and then if they are paying out a dividend, what is their ability to continue to pay out that dividend and to grow it over the future. So again, look into these three companies. I think they're my top picks, but feel free to leave some comments below on other picks that I might have left out of the video, or things that you personally own and love. Thanks again, everybody, for watching. Make sure you hit that like button, hit that subscribe button, and I will see you guys again next week.